Welcome to the channel. I'm the Swedish dividend investor. I hope you're doing well. So, for today, we will take a look into iShares STOXX Global Select Dividend 100 ETF. So, I've ignored this one, since I had no access to it through my main broker. Only the X-Trackers swap version, whatever that means. I do got access to it through my other broker. So I figured, is this a good candidate to buy for income and total return? If you enjoy my work, don't forget to like, comment and subscribe. Your interactions really help my video to reach more viewers. With that out of the way, let's dive into it. This is not financial advice, I'm just sharing my own research and investing journey. For more info, read the full disclaimer in the description. Like always, we will first go through the basics of the fund. The ticker is ISPA on most exchanges, except for the Swiss market. Then the ticker is STGPEX. The fund size is around 3.4 billion euros, and they have a total expense ratio of 0.46%. So the ETF seeks to track the 100 high dividend paying companies from the STOXX Global 1800 index. They pay a quarterly dividend, and by the looks of it, it pays in January, April, July and October. Let's take a look at their holdings. For their top 10 is the following: Fortescue, Shinji Glass Holdings, Yancoal Australia, Aker BP, Henderson Land Development, ABN AMRO Bank, SITC International, Woodside Energy Group, Hang Seng Bank, and Legal & General Group. Some names I recognize, and some completely unknown. But hey, at least we don't have the Mag 7 in the top. Country allocation is the following: US, Hong Kong, Australia, UK, Canada, Netherlands, Japan, France, Singapore, Germany, Denmark, Italy, Norway, Poland, Switzerland, Spain, and other. So, a pretty good geographical diversification. For their sector allocation, we have financials, energy, consumer discretionary, utilities, basic materials, real estate, industrials, telecommunication, consumer staples, healthcare, technology, and other. Let's compare it to some of the ETFs we have looked at before, and of course the S&P 500. Sorting by the max time frame, we can see SPYW at the bottom, followed by FEUI, and then we got ISPA. VDIV is on second place and S&P 500 is at the top. So let's take a look on a pretty bad period, 2022 to 2023. We can actually see ISPA doing pretty fine during the period, but the best in class is VDIV. Let's check year to date, since we had some roughness during the year. I tried using a euro hedged S&P 500 ETF. I got a comment talking about a comparison I made, and the commenter said, since the dollar was down, it was skewed. However, that was during 2022 and 2023, when the dollar was strong. That would boost the return. Anyway, we can see ISPA performs right smack in the middle of the group, with VDIV being at the top. Alright, let's check their dividend history and growth. So, as always, we do some spreadsheet autism. We can see their dividend history is shockingly all over the place. Their yield is around 4.6, and for once we actually got data for 10 years. So we can get their 10-year dividend compound annual growth rate. And it's not looking that good, to be honest. 3.85% for the 3-year growth, 8.38% for the 5-year growth, and 3.14% for the 10-year growth. Do keep in mind that this growth comes with a bad history of 5 cuts. That's one every other year on average. So investing into this, you need to buckle up, because it will be a bumpy ride. Let's do a valuation on this. So, for this one, since the growth is very meh, I would use the same growth for the normal and best case and just use different terminal multiples. That represents the yield the market wants 10 years in the future. Checking up on this ETF, I saw the yield is usually around 4.5% to a tad bit under 6%. I will use a 10% discount rate. Why 10%? This is the average return of the market and this represents our required return. For normal case, 3.5% growth and a terminal multiple of 18. So that's a yield of 5.55% 10 years in the future. We land at a present value of 25.67 euros. For the best case, I've gone with a growth of 3.5% and a terminal multiple of 25. So that's a yield of 4% 10 years in the future, giving us a present value of 31.32 euros. For the worst case, I've gone with 0% growth for the first 3 years and 2% growth for the remaining 7 years. Terminal multiple of 15, so a yield of 6.66%, landing us at a present value of 19.85 euros. As always, since the future is hard to predict, we use a mixed valuation with a probability factor. I've gone with 60% for normal case and 20% each for the best and the worst case, giving us a fair price of 25.64 or 24.36 euros with a 5% margin of safety. Ouch. So, we are trading at around 33 euros right now. That means we would need to see a hefty correction, like 25% down, to make a 10% annual return, if these scenarios would play out. Hey, if the best case plays out, we are already at 9 to 10% return. Remember, this isn't pure science, it's a mix between art and science. So, what's my conclusion? I would say stay away at these levels. If you bought it a couple of years ago, fine, but I couldn't see myself buying this at these price levels. The growth is all over the place and the dividend is kind of low right now. I think VDIV is much better, since it's yielding almost the same but with better growth. With a close to 6% yield, I do think it could be interesting, but we are nowhere near that right now. What do you think about ISPA? Do you own it? Would you consider buying it? Am I completely wrong? Do you have an ETF you want me to take a look into? Let me know in the comments. And as always, don't forget to like and subscribe if you enjoyed the video. But guys, that's it for this one. I'm the Swedish dividend investor and I will see you in the next one. Stay smart, stay patient and keep stacking those dividends. Ha det gött!